All right, so the numbers came in from July, and the market has definitely slowed down a lot. Still a healthy market, but there is one stat that just jumped off the page and make me scratch my head, make me think we could be in for a little bit of a run here with buyers really kind of bailing out of the pool. See what happens. This is Steve, Malone Realty Group, EXP. All right, so coming out of a month into the next month, like right on the 1st, we get a download of all the numbers from the FMLS regarding all the different areas, the greater Atlanta area, as far as shows per listing, average sales price, all that stuff. So there's some numbers that jumped out at me. And as we like to do, like right in the beginning part of the month, we like to do a deep dive on the numbers. Yes, I apologize ahead of time. If you are not an analytical type, this may not be a fun video for you. If you are, like me, sometimes, this is fun. I like looking at the numbers. The numbers tell the story. The truth in the numbers. So we're going to unpeel the onion, okay? Because ogres have layers, onions have layers. We're going to unpeel the onion, okay? And we're going to look at what happened in July and August, and I'm going to give you my idea of what's going to happen next. So let's take a look. All right, so as we talked about, we're going to go deep into the numbers. Okay, let's take a look at what's happened because June is when the rates hit 6%. That's when the buyers finally checked out. That's the end of the pandemic market. We had a 2-year pandemic market. It's over. Now, once we came out of July and August, we got a chance to look at the July numbers. This is going to tell the story. So there's some good news, there's some middle of the road news, and there's one number that I saw that kind of has me scratching my head, wondering what that means for the future. Let's take a look at all of that. First of all, we're going to start with homes for sale, okay? Homes for sale coming out of July. So this is anything existing plus what was added to the market. So July 31st, coming out of July 31st, August 1st, how many homes are on the market? That's what this is, okay? Between new listings, what's left on it, whatever, all that stuff. 12,025. That's the number. This is for the greater Atlanta FMLS, okay? Now, again, some areas are a little higher, some areas a little lower as far as like percentages and whatever. But this is just a broad brush stroke to give you an idea what's going on in the market because I think everybody's seeing these same broad brush kind of things going on. But the number 12,025, you see this graph of the last 3 years, you got to go all the way back to September of 2020 to have a number. That was 12,245. We're at 12,025. So September 2020. So as of September, right after the pandemic started, as we talked about, coming out of the pandemic market. This is where the pandemic hit. It was right in here. We're sitting right at around 16. Going into 2020, coming out of 2019 into 2020, we were in like around the 18,000 range. Then we started coming down. September, we were sitting at 12,245. That number is probably going to go up a little bit August into September. We'll have to see how that goes. But that's the first one to show you that that's actually good news. The number being way down here and way down here is not good. It's not healthy. It leads to homes going up in value 20% year over year. Yeah, that's great, except for the fact that if you're trying to buy a house, it's crazy. If you're sitting in a house, the taxes go up. At the end of the day, it's nice that the prices go up that high, but it's indicative of a market that just can't sustain itself. Okay, so the fact that we're getting more houses on the market does indicate that there's a little more stability coming back to the market. I want to show you this. This is the last 3-year chart. I can change this and go all the way back to 2012. If you go back to 2012, coming out of the recession, you see, we were at like 20,000, 15,000. You see this up and down curve, but it was way up here in the 20,000, 15,000 range until the pandemic hit, and then it came all the way down here into the 5,000, 10,000 range. We're now coming back out of it. We're going back up. We're probably going to end up right in here, okay? Right in there, that's not a bad place to be. That's where we're supposed to be, in the market. The next thing I'm going to show you is the month supply of inventory. Now, again, we'll do 3 years first. Month supply of inventory. This means, I've said it before, it might be confusing, so I'll say it again. If we canceled all new sales, or all new listings, I should say, and we just sold everything that's on the market right now at the rate that everything is the rate everything is selling, how long would it take to sell everything without adding anything else? That's months of inventory. We are now at 1.9, okay? We were all the way down at 1.0 December, January, February, and started to slowly come up, and now we're shooting up. We're at 1.9 right now. We haven't been at 1.9 since, once again, September of 2020. So that's right when the pandemic was starting. That's the beginning of the shift in the pandemic market. We're coming out of it. We're at the end of that shift. Okay. So what does that mean? It means we're getting a more healthy market. It is not time to panic yet. I'm going to open this up one more time. In real estate, the number we look at is in the 5 to 6 month range. 5 to 6 months is a pretty balanced market. Okay. Anything under 5 is typically a seller's market. Under 3 is a strong seller's market. Anything under 2 is like a crazy seller's market. Okay. So you see, from 2013 on, we were in that 3 to 5 month range, just 3 to 5 months. And kind of came down here into 3.5 to 2.5 months, just up and down, up and down. Again, we're well below 5, close to 3. So you're looking at, what's been a very strong seller's market, and then the pandemic hit, and it went all the way down to the bottom. Sorry for the sound effects, because it's a roller coaster. Came all the way down here, and then now it's starting to come back up again. Now everybody's freaking out, and we've talked about this, going to talk about it again real quick. All the people freaking out that we need to, the market's getting ready to crash, all that stuff. The number has to go way above 6 before you're into a buyer's market. When you're a buyer's market, then everything's going to super slow down for a while, and that's when you start to see the prices come back down. We're way not there yet. And we're probably not going to be there for at least the next 5 years. Looking at the trends of how quickly new construction is keeping up, it's not. How much new construction has to keep up with what it missed out on for a good 10 years coming out of the recession. It's going to take forever to get caught up. People don't want to sell their houses. People didn't want to sell their houses during the pandemic because they didn't want people in their house. Buyers could go into one house, look, leave, wash their hands, are done. If you were selling your house in the middle of the pandemic, you were freaked out because you're going to have 50 people in your house touching all your stuff. Nobody wanted that. So nobody sold during the pandemic. Everybody kind of got over that. Then there was a time period where people didn't want to sell because they had nowhere to go. We were down here. Let's bring it back to the last 3 years. We were down here at the 1.0 months of inventory. You had nowhere to go. I mean, you could sell. You had nowhere to go. The only people that were selling were people who had somewhere to go. They already found their place. They got, changed for, or they got, a new job, whatever. They had to move. Okay. So people weren't going to move. Now the problem we have is, even though this number's coming up, it's not going to come up appreciably. I don't think we're going to get up to 3. I think we're going to hold somewhere in the 2s maybe. I don't think we get to 3 because a lot of people are sitting on a loan that's 2.5%, 3%. On, let's say on average, they bought the house for $300,000 and they have a 3% loan on it. What are they going to do? They're going to sell their house to go buy a house that's $600,000, which is almost exactly the same thing, and get a loan that's like 5.5%. A lot of people aren't doing that. So for that reason, I really don't think that we're going to have a whole lot more inventory than what we have right now. It's relaxing. That's good. It needs to not be as crazy. But keep in mind, don't get it twisted. We are still a long, long way. We have to get this number way up above 6, probably to 8 or 9. That's where it was before we had the big crash in 08, 09. We're at like 9 months of inventory, 10 months of inventory. We need to get the number up there before something bad happens. Okay, so I say all that to say it's a healthy market. Okay, it's not as crazy as it was. That wasn't really a healthy market either. Okay, this is a healthy market. The one that has me kind of questioning, kind of like a middle of the road one, is this number right here. Excuse me. Percentage of list price. So this number was going way up, going way up, going way up. In May, people were getting 103% of the list price on average. On average. I mean, some people were getting like 110, 115. We were getting that for a lot of our stuff. That was just the market. I mean, if you did a really good marketing job and you had a bunch of people out there, you're getting way above asking. Last couple of months, it's gone way down. We're at 101% right now. 101 is about as low as it was back in January before it went crazy in spring. It held around that 101 for a while. It was 100.3 back in March of 2021. That's probably where it's going to end up being next month. It's going to be closer to 100%, maybe even slightly below that. What does that mean? What that means is buyers, we say it all the time, we're saying it again because now it's really applicable. Buyers can sometimes be desperate, but buyers are not stupid. Okay, buyers know what stuff is worth. Okay, if you went to thezword.com, there's a Z word estimate that everybody talks about that said that you know what your house is worth. Now, the Z word estimate is not correct. As we always say, it could be a little high, it could be a little low, but it is always wrong. So the Z word estimate at least gives you a ballpark of where your house is worth. Okay, so people know if you're buying a house that is listed for 500,000, you look at the Z word estimate and it's 425. Your first thought is this house is overpriced. People know. Okay, back in February, March of this year, it didn't matter. You ask what you want to ask for, and people are going to come and unload the Brinks truck. Now it's a different story. You have to be priced correctly, okay? And this is showing that 101% last month. I think it's going to be 100% or lower next month. That's going way down, indicative of a healthy market, but this is a harbinger of change, okay? Now I'm going to show you the one that has me shaking my head and wondering how is things going. That wasn't it. That wasn't it either. Hide this. Where'd it go? Oh, this is embarrassing. Here it is. Pending sales. All right. Pending sales. Last 3 years. There's ups and downs. Actually, let's look at the big map first. There's lots of ups and downs. See, and the downs are usually always in December. December. These are the pending sales in a month. There's a number of houses that go under contract in a month. See, last several years before the pandemic, the big drop was always in December. And then it was in December. Then you fast forward to right now. We had one in December this past year. Then you come up to May, and all of a sudden, boom, it was down in June, way down in July. A very weird pattern. Very weird. You got to go all the way back here to see any kind of break from that pattern. You have a dip here. 2010 was not a healthy year in real estate, looks like. I was not in the game back then. I hear the horror stories. It was not pretty from 2008 to 2012. Then 2012, things kind of picked back up a little bit. And we've been on a 10-year run. That being said, this is very interesting that this number is all the way down at 4,900. That is pretty close to where we were in December. December is the off season. Nobody's looking for houses in December except for people who have to move. So that's, Christmas party season. That's all that stuff. That's where we were last month. It just has me scratching my head. What does that mean? I know the buyers left, but I would have thought we wouldn't be that far down. We are that far down. It'll be very interesting to see what happens. I think August is going to be another very quiet month. I don't think it goes down much farther than that, but I think we're going to end up in the upper 4,000s, right near 5,000 for next month, based on all the traffic that we're seeing. There is one thing that I want to share with you that is very interesting. Mortgage applications have inched up for the first time in 5 weeks. Okay, we got this alert yesterday. Total mortgage demand increased 1.2%. Not a big jump, but it's a jump. And the average fixed rate for a 30-year mortgage went to 5.43 from 5.74. Rates have been all over the board. They were as high as 6% back in June. Then they were dropping. Then they came back up, and then they went. So it's been very much a roller coaster. At late last week, I was actually very, very close to 5 on Friday. It was like 5.05 or something like that. It was very, very close. And then so far this week, it's shot back up to 5.5% because the bond markets that are driving the mortgage rates are very active right now. Let's just say it's very unsettled. So you're going to see the mortgage rates bouncing a lot over the next couple of weeks. But what do I think is going to happen? I think the rates are going to stay between that 5% and 6% range. Okay, that's my thought. Anyway, so I say all of that to say, what's going to happen next? So August, the thing I'm telling all of my people, okay, the thing I'm telling my sellers is, let's get your houses ready to list. Let's be ready to go after Labor Day. Okay, what I think is going to happen. This is my, it's kind of my bet, my hunch, my thought, looking at everything that's happening right now. The buyers bailed middle part of June, okay? That doesn't change the fact that they wanted a house. It doesn't change the fact that a lot of them needed a house. They saw 6% rates and they flipped and they got out. They got out like crazy. I'm talking to all kinds of friends of mine who are agents. They're listing houses. Nobody's looking at them. Nobody. I'm getting emails from all these new construction places saying, please come buy our stuff. We'll throw you bonuses, whatever. Nobody's selling houses right now. It's crazy. Okay. So that is not going to last forever. At some point, the buyers are going to look at themselves in the mirror and they're going to kind of say, you know what? Rates are at 5%. They're at 5.5%. Let's go get a house. And they're going to go. That's going to be after Labor Day. We normally see things pick up after Labor Day. I think we're going to have a strong fall. It's still a strong market. The rates historically are not bad. 5 to 5.5% is not bad, okay, historically. Yes, 2 to 3% interest rates are great. If you got it, great, good for you. That was a pandemic-induced rate. Okay, they're supposed to be in that 4 to 5% range, maybe. Maybe it gets below 4% a little bit, whatever. So get the rate now, like at 5 to 5.5, and a refi down the road when the rates go down. Or if they go up, you got the lower rate right now anyway. But do you really want to not buy the right house for you and your family if the rate's a little high? You can change the rate. But in this market where there's not a whole lot of houses, there are more houses than there were, but it's still a seller's market. There's still not like an overabundance of supply. In this market, do you really want to pass on the right house because the rates stink? Okay, we just bought a vacation home. It was exactly the right home, or we turned it into a short-term rental Airbnb type home. So it was our second home. Yeah, rates stink. Okay, but it was the perfect house. Came fully furnished. Has a history on Airbnb. We said, you know what? Grab the house. Get the house. Get the piece of pie. Then you can work about all the other stuff down the road. Rates are going to go down. Talk to my lender. She's going to help me refi down the road. I'm going to get better rates. Whatever. But for now, I found the piece of pie, grabbed it, threw it on the plate. Okay? Find the house. I think a lot of buyers are going to think to themselves, let's get back in the game. That's going to come right after Labor Day. So to our sellers, we're saying, get the house ready. We're going to rock and roll right after Labor Day. Let's hit the ground running. Let's get your house sold. Number one. That's what we're telling our sellers. Our buyers, what I'm telling my buyers right now is, let's bleeping go. Okay? I could curse on YouTube, but I'm not going to do it. Let's bleeping go. Let's go buy a house right now. There's nobody looking. Buyers are out the door and sellers are freaking out. Swoop in, grab a deal, swoop out. Now, there are certain price points where people are still getting multiple offers. I'm looking with somebody right now in the low threes in the Gwinnett Hall County area and multiple offers everywhere we go. So there are certain price points, certain areas, you're still getting multiple offers. But instead of it being 150 offers, it's 5 offers. Much different. But that being said, they have a chance now. You don't have to go $100,000 over asking price. You have a shot. If the house is listed at $325,000, you might get it for $325,000 or $330,000, and you may get an inspection and all that stuff. Okay, so keep that in mind. Most of the buyers are gone. They're going to come back. Jump now. Get the house, and then you'll have the deal before everybody comes back. So tell my sellers after Labor Day is rock and roll time. Tell my buyers right now is rock and roll time. So that's how I see it. Could be completely wrong. It's happened before. You can just ask my wife. But everything's kind of happened the way we thought it was going to happen so far this year. That slowdown happened a little sooner than everybody expected. We thought it was going to be mid-July, ended up being mid-June, whatever. But I think that the buyers are going to come back. They're going to get over the fact that the rates went crazy. Everybody's back in school. They're going to remember, that's right, we were buying a house, and they're going to jump back in. So after Labor Day, it's party time. That's the hope. We'll see what happens. If you have questions, if you are thinking about buying, thinking about selling, just want to talk about the market, always give me a call. Love talking real estate. 470-233-4409. This is Steve. Take care. Bye. Hey, thanks for watching the video today. If you want more information on what's going on in the real estate market, take a look at some of these videos over here that we've posted, keeping up with what buying, selling, things that are going on in the North Georgia market. But if you want to keep up with everything that we post to our YouTube channel, be sure to subscribe to the YouTube channel down there, bottom right. That way you won't miss out on anything.